Both the crypto markets and the stock markets have slid over the past few trading sessions, and these are calls that our next guest has predicted. Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com, is back. Welcome back, Gareth. Now let's talk about Bitcoin first and then stocks. I remember last time you were on the show, a couple of weeks ago, you were calling for a top in Bitcoin of $52,000. Miraculously, it got to exactly $52,000 before taking a slide.
So what we've seen here is a technical retrace, and this is what I've been talking about for those of you that have been following my Bitcoin analysis, is that generally when you have a breakdown in a trend, so you have this trend line here, this was that big head and shoulder breakdown to 30,000, there's a tendency for any chart, doesn't have to be Bitcoin, it could be anything, but it's a tendency to go back to what we call the scene of the crime, which is the breakdown trend line. So you can see all this chop here, a lot of bearishness, then people started to get more confident buying Bitcoin up, then bullishness exuded in the Bitcoin cryptocurrency market, getting you right back to that trend line. And then all of a sudden, miraculously, the charts trigger a sell-off. And again, whether it's Walmart and Litecoin, whether it's El Salvador or whatever it may be, the key is the chart can often lead you there ahead of the news. And you don't know what the news is going to be, but ultimately it does show us more often than not that a fall was going to come here, and that's exactly what it did. And then we're seeing, again, a follow-through today. We haven't really taken out the low pivot from that down day. That's the technical level I'm watching right now. If that gets taken out, then you're likely going down to around the 40 to 41,000 level right here, and then all the way down to 30,000. And you guys know my longer term projections. Even though you're going to see lots of bounces, and it could be 3, 6, maybe even 9 months, eventually you're going to get to the 18 to 20,000 marker on Bitcoin.
18 to 20,000 marker. So you're long-term bearish.
All right. So to phrase this correctly, I'm near-term to mid-term bearish, extreme bullish long-term. So for me, Bitcoin is the future, cryptocurrency is the future, blockchain is the future, but it just needs to wash out this. I mean, there's so much liquidity, and one of the things that I've talked about in previous interviews is how there was going to be a liquidity crisis, there was going to be a deleveraging crisis that was going to trigger the fall in not only stocks but also in cryptocurrencies. Stocks, and you're seeing the leverage. You're getting so much leverage out there, whether it's 4-to-1 margin, whether it's 10-to-1. Sometimes I've even heard crazy things like 100-to-1. And what happens when you get a deleveraging event like in China?
Okay. All right, let's go back to cryptocurrencies and your targets. Long-term bullish. What exactly do you mean by long-term? After 6 months, after 12 months, in 5 years? What do you mean?
Yeah, so, again, the timing is so hard. I would say in 5 years, you're looking at north of 100,000, and then probably within 10 years, 500,000 on Bitcoin.
Let's rewind here now, Gareth.
Yeah.
Okay, so Bitcoin went from 10,000 to over 50,000 in less than a year last year. Now you're saying it's going to take 5 years to climb to 100,000, which is about double where it's at currently. Are you telling me that the biggest runs in crypto are more or less done? Is that what I'm
in the short term, right? So let's look at cycles, right? So if you look at the high pivot on Bitcoin, and focusing on is previous cycles. So if we go to the 2013 cycle, all right, where you had this massive run up in Bitcoin, where you topped out around 1,250, look at the pullback. It went to 500. It then had the huge bounce to 1,100 and then dipped all the way down to 100. So liken that to what we've seen recently. We saw 65,000, which would have been the equivalent right here. Then the dip to 30,000, which was the equivalent of 500. Then the rally to 52 to 53,000 here. And the idea is that you should roll over here and go to the downside. Now, again, that's just one of the cycle moves in Bitcoin. But let's take a look at the 2017 move. 2017 move rallies up to 20,000, corrects to 11,000. You then get the bounce back to 17. And then a move down to 5,000 or sub 5,000 before it kind of bottomed out and then started to move. Another key pivot here is that if you look at the years between high pivots, so the high pivot was 2013. 4 years later, 2017. 4 years later, 2021. So my idea is that you'll likely have about 4 to 5 years from the 65,000 high before you get above and break to 100,000. And
let's revisit your 52,000 call again, Gareth, because I know it was a while ago since you made that call. Can you explain again the trend lines that you were looking at that had projected 52,000?
Sure, absolutely. So here the initial call, and this is one of the ones from months ago where you had me on, and I made this call, and then you had me on to talk about it, was that you had a very distinctive head and shoulder pattern here. So shoulder, head, and shoulder. And basically what you do is you connect the neckline, which is the base here, to this base. And when you break down, you get a target range of the same as this high with a drop line straight to this. That's an even, basically what we call a measured move down to here. And that gave me that 30,000 target. Once target is achieved, technically and psychologically, you're apt to see a retrace where bulls start to say and think to themselves, especially when price goes sideways, okay, the worst is over. You're going to start to see the market rally up. They slowly get more and more bullish. One of the key pivots was when you could take out this high around 40,000, and that really led to that continued move up. Once you get up here, this is a level where this big down move began, right? So that's a tendency for people that were buying all the way over here to say, okay, I have now gotten my money back. I'm essentially whole. My pie is whole. My money is back to where it was. I'm going to exit. And that's why this line oftentimes is a good trigger for a sell. It's amazing how it works. I can't explain necessarily all the nuances of it. But again, draw that trend line, right? I mean, look at the beautiful trend line right there connecting these lows. And then it just so happens that that was the high on Bitcoin, a couple weeks ago.
Yeah, okay. Well, the Bitcoin hodlers might say to you, Gareth, that's just some FUD you're spreading. $18,000, $20,000. That's not going to happen this time. I mean, the environment is so much different this time than last time. We have a lot more institutional adoption. We have a lot more mass awareness. The millennials are going in, with the advent of trading apps like Robinhood and other, cryptocurrency wallets and exchanges. It's now a lot easier to be involved in the market. So there's a lot more participants holding down the support. How would you respond?
Yes. So first of all, I hope they're right. All right. So I have no problem with Bitcoin rallying up. I have nothing against Bitcoin. As you guys know, I'm long-term bullish, but I have to just go back and say, okay, for me as a trader, the charts have been what has told me the future, right? The charts represent human emotion, right? Pull back. And remember, folks, is if you go back to previous cycles, I mean, the average pullback in Bitcoin after a big run is like 80%. We haven't seen that. And again, I hope it's different. Hopefully it is. I have to be proven wrong first. I'll tell you one thing. The way you prove it wrong, the way I would start saying, okay, this is different, is if you take out 65,000. That has never happened in a previous cycle where you have only corrected this much and taken out the highs. Yeah. So if we take out 65,000, now you're good. Now you should see 100,000 probably within months of that happening.
Really? What happens if you take out 65,000 and it starts correcting? Would you say, well, 65 is the new 52, I guess?
Yeah, so at that point, so basically if you take out 65,000, you're going to see, number one, short covering, right? So there's going to be, I'm sure there's a lot of institutions out there that have a lot of shorts that are going to be, that would be their stop use level. So you'd see a lot of buying to cover those shorts, which would then trigger an even quicker move up. And my guess is you start to get up to those levels, you'll see even more corporate adoption of it. And by